Hello, everyone, and welcome into CrushTheStreet.com. I am Kenneth Amaduri. I'm feeling pretty good about the way the markets are playing out, largely because it aligns with my analysis. We're seeing gold $1,600, Bitcoin, close to 10,000. We were a little bit higher than that as we record this interview now. I believe Bitcoin's around $9,500, still up really, really big over the last short term here, last little bit. And the thesis seems intact. And I try not to get too emotional about this because you don't want to be an emotional investor. You kind of want to stay focused and kind of keep your eyes on the prize and be diligent and prudent and resilient through the thick and thin. And to talk to us about all of this today and to kind of give me some mental conditioning, some good insight on how to approach this is Mark Yusko of Morgan Creek Capital, founder, CEO, and Chief Investment Officer. He's a returning guest. His website is morgancreekcap.com. We'll have the link in the description area. Mark, thanks for coming back on the show with me today.
No, thanks for having me. I always love the conversation here at Crush the Street, and excited to get going today.
Well, let's start off with gold, if that's okay. I mean, it's been quite the start to the decade with gold now over $1,600. What are your thoughts on this? Why are we seeing gold move higher in an environment where things seem to be intact? The stock market is doing pretty good, all-time highs conventionally. The economy is strong. I mean, what's going on that's causing this environment where gold is just inching higher and higher and higher?
Yeah, look, it's really simple. I even have a hashtag for it. It's called hashtag FIAT FIASCO. Basically the world, and what I mean by that is really the developed markets of the world, are basically destroying their currencies. And it's the only way out, right? We have a massive demographic problem. Too many people turning 65 to 85, 10,000 every day in the US and Europe for the next 17 years. Japan's even worse. China right behind us. So you basically have this massive demographic problem that's going to lead to lower and lower interest rates. Because of that, we've got this massive debt problem. All these countries are issuing massive amounts of debt to pay for the things that the entitlements that they've promised to these older generations. The definition of an entitlement is a promise that you make to yourself that you don't fund and you ask your kids and grandkids to pay for. Who wouldn't vote for that? And then the last part of it's deflation. And deflation comes from the devaluation of fiat currencies and the production of massive quantities of fiat currencies. In fact, here's a stat. In the last 6 months, the global central banks have increased the stock of money at the highest rate in history, over 7% annualized. It's crazy to think that we're 11 years removed from the global financial crisis and we have the loosest financial conditions in the history of mankind. So that all leads to sound money, gold being the original sound money. Bitcoin is the sound money of the future, but it's a perfect environment, a perfect storm for gold.
So, Mark, new news just coming out of China. They're injecting a record 5 trillion yuan, roughly 725 billion, to arrest economic crash, to support their financial system. How big of a story is the coronavirus, in your opinion, to what is going on with stocks right now? It seems to be scaring the stock market more than, a potential war with Iran or, this. It doesn't seem like the deficits or the debt levels matter anymore. But the market seemed to get a little worried about this virus, which has killed, over 2,000 people now, affected over 75,000 people officially.
Yeah. So look, I actually think the coronavirus hasn't impacted the markets at all, shockingly, right? The markets are at new all-time highs. It's not just the US, it's in Europe, it's in Asia. China was up 2.5% the other night. It's actually kind of crazy when you think about it, given that Look, I don't believe that the coronavirus is really that big a deal. Look, 2,000 people dying is tragic, but that's, 1/10 of the people who have died from the flu this year. It's, 1/25 of the number of people that will die from pneumonia this year. So, why do we not quarantine people for pneumonia, but suddenly we're quarantining entire cities, over 700 million people under quarantine for a virus that's infected? Even if the stats are wrong, which I'm not in that camp, I actually think they've done a great job in China with their reporting. But even if they were wrong by a factor of 2 or 3, it's still, the response has been totally disproportionate to the threat. And because of that response, we're seeing real disruption, like actual disruption of supply chains around the world. I'll give you 2 anecdotal pieces. So last weekend, I took my little guy to the auto show, and we were looking at the Telluride made by Kia and the Palisade made by Hyundai. And talking to the guy, and the guy said, can't get one. I'm like, what do you mean? He says, we don't have any. I said, well, when do you think you're going to get them? No idea. Can't get parts, can't make cars. So that was the first thing. Then we actually went to Best Buy. It's our normal Sunday afternoon jaunt, just to wander the store. And crazy, it felt like a bomb had gone off inside. The shelves were empty. The floor was clear. Usually the floor is filled up by giant boxes with TVs. There was no inventory. So there's going to be an impact on revenues and profits in the first quarter, far disproportionate to the actual threat of the virus itself. So I do think that the market's not paying attention, and at some point maybe it will, but at least right now, all the market cares about is, to your point, China putting in a record amount of stimulus, $725 billion, Fed putting in a record amount of stimulus. They've never expanded their balance sheet this quickly, not in the depths of QE1, QE2, QE3. Now they say, this in no way resembles QE. Really, Jerome, it's exactly QE. I don't care if you buy long-term debt or short-term debt, it's still QE. And it still finds its way, that liquidity finds its way into stocks through margin loans and all kinds of things. So I think liquidity drives markets. I think we got a massive liquidity wave, and that's what's causing maybe what will become the greatest bubble in history, which is a big statement because we had a really big bubble in 2000. And I think there are signs of excess in this bubble that actually make 2000 not seem as crazy. And I can point to things like Tesla or Beyond Meat or Zoom. We're talking on Zoom today. Crazy. That company sells, I think, at over 65 times sales. Can't do the math to make that investment work over any period.
Yeah, I mean, I'm sitting here using Zoom, and it doesn't cost very much at all, and it's their valuation is going crazy.
Yeah, I've never paid a penny to Zoom that I'm aware of. So,
well, to get these longer than 10 or 20-minute calls, I got to pay them a little something.
Okay. Got it.
So, Mark, how has the gold market, for instance, affected you and what you guys do at Morgan Creek Capital? I mean, with what you're seeing in the stock market, how has that impacted the way you advise people and position people with their portfolios?
Yep. So if you think about Morgan Creek Capital, we're a registered investment advisor. We have multiple product lines. We do private investments. We do public investments. We do hedged investments. We do emerging market investments. We do blockchain-related venture capital. We have a digital asset index fund. So where gold comes in and where the stock market comes in is really in our hedged products and in the traditional parts of our advisory client portfolios. And we have been advising clients for the last couple of years to put a portion of their assets in gold, and in particular gold miners recently, because gold miners are really, really cheap, about as cheap as they've been any time in history. And we think that's a really interesting opportunity over the next few years. And again, that's a 1%, 2%, 3% type position. But I think it's a great hedge against the overvaluation in the public markets, the liquid public markets, The other place where we're seeing some impact is, we have been encouraging people to be very disciplined about rebalancing and selling into strength, buying into weakness. So, we tend to be telling people to be selling their US equities, to be buying some of the European names that have been beaten down, to buy some of the emerging market countries that are really cheap. China is actually one we think is really attractive, to buy some gold and gold miners, to buy some Bitcoin and other crypto related assets. All these things we think diversify a portfolio, hedge against downside. And then the last thing we tell people is really to buy some long bonds. And people look at it and say, wait a minute, bonds are terrible. The interest rates have to go up. Interest rates aren't going to go up. They're going to continue to go down. That's going to continue to put pressure on valuations, which makes me think that this bubble's not over yet. But it also bodes very well for gold and other stores of value that protect you against the devaluation of currencies, which is rampant. The yen is being devalued, the euro is being devalued, the dollar ultimately is being devalued, even though it looks like it's going up. It's just going down less relative to things like Bitcoin. I mean, Bitcoin's up 35% this year against the dollar. I'll argue that Bitcoin's not really up, the dollar's actually down.
Mark, before we get it deeper into Bitcoin, what about silver? I mean, we got awfully close to like a 90-to-1 ratio here with silver to gold, and gold's moving up quickly. And, conventionally we would expect silver to move more, at a faster rate than gold. And I feel like a lot of people may be questioning silver's role in relation to gold over the years. Maybe it's losing that historical ratio that it's always had to other things. Maybe Bitcoin is kind of like, more of a margin safe haven play that's cutting into the luster that maybe silver once had. So, I mean, do you believe that to be true in at any point of the spectrum, or is silver just going to catch up in a major way here, in your opinion?
No, look, I think you make a really important insight in that analysis, which is silver has, past tense, been very highly correlated with gold. There's been a pretty stable ratio. Now it goes to peaks and troughs, but it was always mean reverting. And I think what has happened is, silver isn't quite as unique as gold. Gold is a very scarce asset because the amount of gold mined each year roughly equals that which is lost or used or stolen. So the stock to flow ratio is very stable, right? The new flow is not very high relative to the existing stock. Silver, on the other hand, a little easier to mine, a little more plentiful, lots more industrial uses. So the flow tends to be bigger and the stock to flow ratio not quite as good. I think what people are realizing is that Bitcoin in particular has a stock to flow that after the halving in May will actually be superior to gold. It'll be a more scarce asset. It actually has some other characteristics that make it more valuable. So I do think there's a substitution effect. People who used to own some silver are now going to own a little bit of Bitcoin. I don't know that that's dramatic yet. And I think the problem for silver is the natural buyers of gold, silver, gold miners, silver miners have really kind of exited stage left with this massive move to passive investing. These stocks are all very micro cap, small cap. They just don't have much weighting in passive indices. So all the money that's flowing into passive through 401ks, 403bs, and index investing is going to the top of the stack, right? It's a momentum strategy. It buys based on capitalization weighting. So the FANGs, here's a crazy thing. Every time someone buys an S&P 500 index, 4+% of it goes into Apple. Not because it's a good stock, but because that's the way that the algorithm works. And that means that the natural buyers, the human beings that used to be involved in the markets that would say, oh, silver's really cheap, or gold's really cheap, or industrials are really cheap, or value matters, those people have been wiped out. They're shutting down their firms, their funds. And I think we're at this very dangerous time, again, very similar to 2000, where that belief that capitalization weighted indexing is passive, and I just call it slow active, or dumb, meaning rule-based, not unintelligent, but it's rule-based. So it's doing things that a thinking person would never do. A thinking person would never pay 35 times earnings for a company that has no growth. A thinking person would, and that's Hormel or Campbell Soup. A thinking person would never pay 50, 60, 80 times sales for a company. That's Zoom, Beyond Meat, et cetera. They just wouldn't do that. A thinking person wouldn't do that. A momentum chasing, dumb rule-based strategy that has no choice, like an ETF or an index, they would do that.
Mark, let's talk about Bitcoin.
Yeah.
So a lot of people might call Bitcoin, put that in the same category as this momentum chasing, bubble. I tend to like what we're seeing in Bitcoin. I think there's a lot more fundamentals that a lot of people want to give it credit for.
Yeah.
But what does $10,000 Bitcoin mean to you? And what do you make of these quick moves? That, we see it move up real quick, and then we have these moments where it just corrects really fast. What are your thoughts on that? And I want to get into it a little more.
Look, Bitcoin is a very young asset, right? It's an 11-year-old company or network. It's actually not a company, it's a network. So it's an 11-year-old network. And the first 5 years really don't even count because they were small dollars, not very many participants, not a lot of network effect. It's really the last 6 years since 2013, 14, where we really had something that was institutional grade. So it's a very young network. It's a very young asset and asset class. And therefore, it's still very concentrated, right? There's still a lot of ownership in a very few hands. And it's like Tesla stock. Why does Tesla stock move up or down 5, 6, 7, 8, 10% in a day? It's because the free float is very low. And when the free float of an asset is very low, it can be manipulated very easily. So short squeezes can happen and can dump on one seller selling even a meaningful amount. And I think that's what's happened in these highly illiquid public stocks that we read about every day. There was one like Space. I think 400 times the daily float traded in one day yesterday or 2 days ago. So, just craziness. That's absolute insanity. Because remember, the money doesn't go to the company. That's just traded between algorithms and HFTs and Robinhood accounts. So someone's winning, someone's losing. The company doesn't actually benefit from that money. I think the difference in Bitcoin is Bitcoin has a fundamental value. Because how can you value it? It's really easy. There are fundamentals, right? The number of users in the network, the average size of the transaction, the size of the block, et cetera, et cetera. All those things are trackable. All of them are making new highs. Hash rate, new highs. All the indicators of usage and adoption are making new highs. And you can track roughly what the value of the underlying network is. And you can use a stock to flow model, which has become very popular. You can use a nonlinear regression model, which is very popular kind of a few years ago. You can use, a don't look back kind of logarithmic model. Lots of models that you can use to say, what does the network effect, Metcalfe's law, say the value of this asset should be? And we think it's somewhere in the low teens. Is it 12, 13, 14? Don't really know, but it's somewhere around that per unit today. So at 10,000 or 9,500, it's undervalued. So we would be accumulating. When it got to 20,000 back in 2017, we thought it was 100% over its fair value. We said, look, if you're going to hold forever, hold. But if you're going to trade, definitely go to the sidelines and come back, when custody is solved. Custody is still a big issue. That lack of custody kind of really took it down to that $3,000 low because people were afraid that maybe we wouldn't get the real network effect and the great wall of money of institutions coming in. That has been solved. We got people like Fidelity and Zappo and others providing great services. So, we think the future is very, very bright for Bitcoin and for Bitcoin prices. It won't happen overnight, but there's a very strong case that Bitcoin could become digital gold and have a market cap roughly equivalent to gold, and that's measured in trillions, not hundreds of billions, where we are today, which would mean 6 digits for the price of Bitcoin, and potentially even 7 digits someday. So look, it's supply and demand. There's only 21 million minus what's been lost that will ever be created. There's 7.5 billion people on the planet. Everybody's going to want to own some of this at some point. It will be, right, one of the currencies that's used globally. Whether it's the global reserve currency someday, who knows? But it has the potential to change everything in the way we think about money. Money over internet protocol is as revolutionary as voice over internet protocol, which we're using right now, or information over internet protocol like the internet. And you go back and you watch the Katie Couric and Bryant Gumbel clip from Good Morning America in 1994. What is internet? It's stunning. And we're not that far removed from that. And now the internet is invisible. Everybody uses it every single day. Information's ubiquitous. Commerce is easy. The same thing's going to happen with money and value. And as we get what I call the trust net, which is the internet of money or internet of value, it'll be bigger than the internet, bigger than the mobile net, which is all of our handheld supercomputers that are interconnected. It will connect everything of value in the world and will be, I think, the greatest wealth creation opportunity I'll probably see in my lifetime. Although I plan to stay around a while.
Yeah, don't
sugarcoat it, right?
Potential of what might come down the road here, right? We got some exciting things to look forward to. Yeah, I couldn't agree with you more. What I want to kind of pick your brain on now is the concern. Is Bitcoin the chosen one? A lot of people are a little bit hesitant to say that. There's a lot of confusion out there. Bitcoin SV, Bitcoin Cash, all the different hard forks. You got Ethereum, and the list goes on and on with all of the different cryptocurrencies. What are your thoughts surrounding that, and how confident are you that Bitcoin, the $10,000 Bitcoin that you buy on Coinbase, is the one that we can believe and have our wealth stored in over the longer term?
Yeah, so it is the question, and let's just break it down real quick. So you've got, I use the Saudi Arabia analogy. There's the king, the crown prince, and all the other princes that hate each other. So in crypto, you got Bitcoin, which is the king. You got Ethereum, the crown prince, and then all the other princes that hate each other. And if you think about cryptocurrencies, there's only about a dozen, and that's Bitcoin, Bitcoin Cash, Bitcoin SV, Dash, Monero, et cetera. Then you've got, thousands, affectionately called shit coins in the public record in Congress. But really what those are utility tokens. They're just crowdsourced venture capital projects. 99% of them will go to zero, and that's okay. That's what crowdsourced venture capital projects should have a loss ratio of 99%. But the 1% that don't are going to be amazing, and you might make 1,000 times your money. So if you have technological expertise, you want to speculate on that, great. But it's venture capital. Don't confuse the two or conflate the two. Why is Bitcoin the winner? It's called the law of increasing returns. Paul Romer won the Nobel Prize 2 years ago for this. And it's not the best technology that wins. It's the technology that gets adoption first. So Betamax versus VHS. Why does Walmart always, no, it is. Why does Target always locate across the street from Walmart, right? Because the more things that cluster together, the more success you have. Or why are all the auto dealerships on the same place, or all the shoe stores on State Street in Chicago? So it's the law of increasing returns. The more competition, the better. But at the end of the day, the one that had early adoption is the ultimate winner. So when it comes to technology, Bitcoin had first mover advantage. It's got the biggest network effect. The miracle of Bitcoin was that it made it to $1 from 0.003 cents. $1 to $10, not a miracle. 10 to 100, not a miracle. 100 to 1,000, not a miracle. 1,000 to 10,000, not a miracle. 10,000 to a million, not a miracle. The miracle was that survival in the beginning that allowed it to become the winner. And people say, oh, but what if new technology comes along? That's the difference. It can't be MySpace to Facebook, because Facebook had better technology and MySpace couldn't copy it. In the open source world, if you create something better and I'm the creator of Bitcoin, I can copy paste and put it on my chain and I become better. So any enhancement, okay, can be incorporated into Bitcoin. But the reason I think Bitcoin wins as store of value, digital gold, is it is the most secure network in the world. No fraudulent transactions ever, not one. It's got less than an hour and a half of downtime in 11 years. And the key to it is it's the most powerful computing network in the world, 1,500 times more powerful than number 2 in Switzerland. So it's the most powerful network. Now it's super slow. People say, well, then it can't be used as money. That's the whole point. Money's not used as money, right? Your money sits in the bank. You charge with a credit card. They batch your transactions. They send you a bill at the end of the month and you transfer the money once a month. You don't take the money out of the bank every time you make a transaction. You don't carry around money in your wallet anymore. So electronic money solved the first problem. Digital money, Bitcoin, will solve the next problem. We'll have Lightning Network and other things to allow for payment rails and faster transaction processing, of course. But at the end of the day, Bitcoin, I believe, is money over internet protocol.
Mark, I got to ask you then about Ethereum. What are your thoughts surrounding Ethereum, considering we saw a massive move in Ethereum? I mean, people were talking about the flippening. I mean, right. Ethereum becoming bigger and more valuable than Bitcoin.
Yeah, than Bitcoin. And look, Ethereum's great. Ethereum's the crown prince, right? It's number 2. But number 2 is not number 1. And they don't need to be the same. Ethereum, to me, is like the www dot of the internet of money. So if you think about Bitcoin as being TCP/IP, so there were 85 internet protocols in the 60s and 70s. Today we have 5. We got TCP/IP, HTTP, SMTP, FTP, and www dot. That's it. So I'm sure there's other ones that I don't know about, but those are the basic 5 in the stack. And the same thing's going to happen here is people are going to build applications like DeFi on top of Ethereum, but that doesn't change the need or the dominance of Bitcoin as a store of value and digital gold. Ethereum is a tool. It is a protocol that allows for development of other things that will, look, Web 3.0 will be massively bigger than Web 2.0, which was massively bigger than Web 1.0. And it's because it's a parabolic curve. You think about the area under the curve. If the left side of a parabolic curve doesn't look that big, then you go to the middle part, it's starting to get a little bigger, it's getting a little thicker. The right side of a parabolic curve is massive, the area under the curve. So that's what Web 3.0 is, and that's where Ethereum can play a role. But I think Ethereum can be monster big over time. It's got to solve some challenges technologically, but that doesn't compete at all, I don't think, with Bitcoin as the core base layer protocol for the internet of money.
Good word. Well, so, you mentioned low teens here. That's kind of like a short-term prediction. What about longer term? I mean, you said $1 million Bitcoin is not a miracle, 100,000. No. I mean, what's like a realistic price point for you where you're like, no, I think it's worth this amount and I won't sell it if it got this high?
Well, I don't plan on selling my Bitcoins for a long time, hopefully ever. And hopefully I'll use bits and pieces of them over time to transact. But the way I look at it is the value, the underlying value will continue to follow this stock to flow model or this parabolic growth model. And, today it's somewhere in the mid-teens. By the end of this year, it's probably in the low 20s-ish, maybe as high as 30. And by the middle of 2021, towards the end of 2021, I think we hit that magic 100,000 level. And then we start the next kind of slow period where it won't rise quite as much. There'll be a little bit of FOMO and it might overshoot 100 and then drop. We'll have another bear market. And then we get the next halvening 4 years later. And that lines up with the emergence of the trust net. I have this 14-year cycle that I've been tracking really, since the start of my career. So 54 was the mainframe, 68 was the microchip, 82 was the personal computer, 96 was the internet, 2010 was the mobile net, and 2024 is the trust net, where everybody gets that this is the future of money and value. And the fact that that lines up with the next halvening, that's when I think we could see hundreds of thousands of dollars in value. And then, ultimately it depends how much capital comes into the network, because networks are simple, right? It's Metcalfe's law. It's the inverse of 1 over the sum of the squares. And that's really easy to calculate. And today there are lots and lots of many tens of millions of wallets. You never know exactly how many, because you got Coinbase, which shows up as one wallet, but it's really lots and lots of wallets. So as long as that number keeps rising, as long as people keep using and adopting, which I think will happen, the glide plane long term, I think ultimately what we need to do is a split, like a stock split. We need to stop talking about Bitcoin. We need to start talking about Satoshis. What's the price of a Satoshi? 100 million Satoshis in a Bitcoin, and get down to pennies and then dimes and quarters and things like that.
It's exciting stuff, Mark. Mark, I want to appreciate you for coming on Crush the Street with me once again. If people want to learn more about you, your work, Morgan Creek Capital, tell us a little bit about it and what they can expect to find if they reach out to you.
Yep. So, happy to have people come visit morgancreekcap.com. Morgan Creek, we're a registered investment advisor. We've got a handful of different products, most for accredited investors. But, we have lots of educational resources. We've got a YouTube channel around the world with Yusko. If you just type my name, Mark Yusko, into YouTube, it'll pop up. Got a lot of educational videos on there, 3 of them about crypto, blockchain 101, crypto capitalism, and get off zero, which is the case, why zero is the wrong allocation to these assets. I'm on Twitter at Mark Yusko, tweet a lot about these subjects and topics. And then there's other resources out there. But, look, we are excited about this opportunity. We've got our legacy business that we continue to be excited about as well. But I've gone from spending no time in this space 6 years ago to spending a lot of my time because one, look, I believe in the technology. I believe in how it's going to literally change the face of commerce and value and how we exchange assets in the future. It really comes down to the technology of triple entry accounting. It has to do with this digital, or the movement from analog to electronic to digital. And in the digital age, we need digital resources, digital solutions. And I think we're well on the way there. So we're excited. We're excited to talk about it. Appreciate you having me on the show.
Well, you had me so excited. I had to buy another Bitcoin while I was on the show. So
I love it.
Watching it, it came down below right at around 9,500. So I'm like, let's.
I love
let's
it.
Get back in.
We'll come back and we'll watch this in 4 or 5 years, and you can buy me a drink.
Absolutely, Mark. Well, again, thanks so much for coming on Crush the Street with me today. Appreciate your time.
No, great to be here. Thanks.